Welcome back to Fast Money. Crypto investors everywhere biting their nails ahead of what many see as a key test for the crypto market, tax day. Bob Pisani's got more on this make or break moment for crypto. Bob.
And Melissa, Bitcoin's down 4% today, but still staging a mini rally since the bottom. The question is, why is this happening? Bitcoin bottomed on April 6th at about 6,600 after dropping from about 11,000 in early March. It's a pretty steep descent. Since bottoming last week, it's up almost 20%. And one prominent theory for that March dip is that owners of cryptocurrencies who made money in 2017 had to convert their coin into dollars to pay their taxes. Well, this sounds perfectly plausible, but it's hard to assign how much a factor it was in the downturn. So first, the sell-off began in December, the big sell-off. We didn't bottom until February. So maybe tax selling was a factor as we moved down again in March. Volume did pick up modestly as the March decline began, indicating that there was higher levels of selling pressure than in months before. That would lend some support to the tax selling idea. But it could also just as easily be buyers who bought in February who were discouraged when the market again went into a major downtrend in March. Again, hard to assign clear cause here. Finally, even if tax selling was a factor, it's going to take a lot more than that to decisively turn the trend around. Just take a look here. For those of you keeping track of the technicals, and I love people trading on technicals, we may be in a minor uptrend in the last week, but look at this. Long term, we are still in a descending trend line from the December high, and we have not yet broken out of that. We have seen a series of lower priced highs since then. That's a descending. I'd say breaking that trend line, and by the way, we'd have to move up above 8,700. That would be a major victory for the bulls. Now, that's about $800 away, not far, but we're certainly heading in that direction. Back to you, Melissa.
All right. Thank you very much, Bob Pisani. For more, let's bring in none other than the man behind the Bitcoin tax selling theory, Fundstrat's Tom Lee. Tom, always good to see you.
Great to see you guys.
How did you come up with this?
Well, there's quite a lot of discussion in a lot of the crypto groups about the magnitude of tax selling. So I think we ended up just taking a lot of these thoughts, putting it into a spreadsheet, and we came up with, an estimate that $25 billion would be the tax bill owed to the IRS for realized gains for U.S. households, which is a windfall for the IRS. The most that they ever received in capital gains in any single year was $144 billion.
Right. This also implies, though, that most people who are holders had gains as opposed to losses.
Yes, and it's actually easier to trigger capital gains than most people realize. If someone bought an altcoin, as soon as they receive those coins from an ICO, that's taxable. If you sold one token and flipped into another, that's taxable. So many events became realized taxable events.
Mm-hmm. Tim, I think you have a good question for Tom.
Well, my question is that if this is such a global phenomenon and that 2/3 possibly of crypto trading and activity goes on in Asia, but again, your numbers say 25 billion alone. If that's U.S., that will move the market. But a U.S. tax moment for a global industry shouldn't be knocking it down so badly.
It's a great point, but the multiplier of fiat, let's say, so a dollar movement to crypto market cap change is potentially 20 to 25 times. So a $25 billion liquidation is several $100 billion of market cap impact. Mm-hmm. So it's, it's the nature of crypto being sort of an earlier stage industry. It's much more sensitive to fiat flows.
What do you need to see in the crypto market in order to make you believe that your theory was correct, that it was tax selling pressure? Do we need to reclaim a level, or,
Yeah, I would say that we need to see more dynamic price performance in Bitcoin in the next couple weeks. One measure is the Bitcoin Misery Index, which was 18 in February, and it's recovered now to 34. So it's still a little bit above misery, but it's actually come back nicely.
So, Tom, you're one of the few crypto guys who wears a tie and a jacket, all right? But that also means that you talk to a lot of institutional investors, right?
Yes.
And a lot of your research is obviously geared to them. Are you seeing them this year in this downturn getting more interested with the price down 60% from the highs in December? Because just because it's down, that means there's obviously a lot of selling.
Yeah.
There's also been buyers. Is that one of the reasons why we're seeing less volatility this year, even on the downside, because there are institutions buying?
Well, there's clearer heads. I think in December last year, there was this fear and need to get involved with crypto without really doing the work. Since the start of the year, there's been real authentic interest from our institutional clients. So we're still doing meetings and teach-ins and providing a lot of resources. But there's not this need to be like, okay, I got to buy it and figure it out. So now there's folks really trying to understand what are the 5-10 year drivers. And that's the kind of holders you want anyways.
Is that mainly custody because there's a custody concern, or is it
100%? Yeah.
So there's a custody concern, and then you have the regulation issues, right? So Jay Clayton comes out and makes a comment about every token being deemed a security, maybe overblows it a little bit, is going to pull his, walk his statement back. But the reality is, how much of an overhang is that still? Meaning the SEC or the
It's regulatory uncertainty in the U.S. is a big deal because at the end of the day, nobody wants to take career risk putting an instrument in their portfolio that could suddenly be deemed illegal or put them in the wrong side of it. I think it's actually not a problem for Bitcoin at the moment because it's probably pretty clearly a commodity. But then custody, as you said, is a problem. Nobody really wants to explain that they lost a token somehow because custody wasn't done correctly.
In terms of the recent sell-off that we've seen in crypto, Tom, I mean, does the length of it make you feel better about the potential bounce that is to come?
Yes. I mean, I think that one of the things you want to see in a proper bottom is that you have a duration of flatness that causes sentiment to collapse. I think that the sentiment among original, even 2014 holders of crypto is terrible right now. So I think that
you're talking about the HODL people. I mean,
yes,
people who were in real early on.
Yes, it's like HODL with expletives. And so I think it's actually positive. But what's interesting is, I don't know if we have a chart here, but if you look at the 2014 Bitcoin bear market, which was 405 days, it took 405 days, as you can see here, to retrace 1 month of gains. So Bitcoin at the bottom of the 2015 bear market was exactly where Bitcoin was in October 2013. So it peaked in November, but it took, in 1 month of gains, it took 405 days to roll all that back.
Wow.
Interestingly, Bitcoin, a month before the peak was roughly 5,900, which is where we are, where it bottomed recently.
Okay. Tom, good to see you. Thank you. Tom Lee.
Thanks.
A fun strat. What do you think of the
downturn? The
downturn?
technicals really look very interesting on both sides. I mean, I think that this could take a bit longer to bottom out. I think that Bob Pisani's chart, that you look at that downtrend, I just do think that's important near term because I do think if it fails and it makes lower lows, you're going back to 5,000, and then Tom's misery index kind of gets extended a little bit. But at the end of the day, and we talk about it a lot, we have a lot of different guests about crypto. There's so much money coming into projects related to it, and that's the stuff I think you want to keep an eye on because that's the stuff, if you're thinking about a 5-10 year time horizon, that's the stuff that's really going to reinforce
I mean, it's amazing. I mean, Consensus is a company, they're an incubator. They basically put companies or these ICOs on the Ethereum blockchain, and they're getting calls off the hook. They've grown to 700 people. I mean, this is an amazing, amazing platform they're building out there. So again, I think it's about custody. I think it's a matter of time for regulation to actually look at these and say, they're not. They're utility tokens, and give them an all clear, and you're going to see valuations rip.
I don't want to make any promises, Ricky. I would never swear on the Bitcoin, but you play your cards right. I'm talking 2018 Honda CR-V. I'm talking backup camera. I'm talking seat warmer. You ever put fast food on a seat warmer? It's like fine dining, baby. Let's go! Whew. Fire me up.